From the dawn of civilization, humanity has been defined by the pursuit of value. Long before coins, before credit, before banks, people bartered, grain for livestock, salt for tools. But barter was clumsy, limited by coincidence and trust. So we invented symbols of value: shells in the Pacific, salt in Africa, silver in Mesopotamia. Around 600 BCE, the kingdom of Lydia struck the first coins, stamped with a ruler's mark, the birth of money as power. Rome perfected coinage and weaponized it to fund conquests, until greed diluted silver and collapsed its economy. Proof that confidence, not metal, sustains value. In China, paper money appeared in the Tang and Song dynasties, turning trust into ink and fiber. By the Middle Ages, merchants in Venice and Florence pioneered banking, and the Medici family made finance an instrument of empire. Double-entry bookkeeping let wealth be tracked, expanded, and abstracted. Money became information. In the 1600s, Amsterdam created the first stock exchange, and the Dutch East India Company issued shares, inviting ordinary citizens to profit from global trade. The start of capitalism's engine. The Bank of England followed, institutionalizing debt as a tool of national power. But speculation grew alongside progress. The South Sea Bubble, the Mississippi Scheme, the endless cycle of greed and collapse. The Industrial Revolution multiplied money's speed. Banks spread, currencies stabilized, and gold-backed systems anchored trust, until World War I shattered stability. In 1913, the Federal Reserve was born to manage volatility, yet crises only evolved. After World War II, Bretton Woods tied global currencies to the US dollar, turning America into the world's financial heart. When Nixon ended the gold standard in 1971, money lost its tether to metal and became fully faith-based. Digits, promises, and credit expanding infinitely. The late 20th century digitized finance. ATMs, credit cards, and electronic transfers reshaped daily life, while markets went global, trading billions in microseconds. Then came the internet boom, the crash, and a new rebellion: Bitcoin. In 2009, anonymous code challenged centuries of centralized control. Blockchain offered transparency but birthed speculation. The rise of crypto, fintech, and AI-driven markets blurred the line between innovation and illusion. Today, money exists everywhere and nowhere, in servers, in ledgers, in algorithms. Wealth moves faster than regulation, and trust is outsourced to code. Yet the fundamentals remain unchanged. Finance is still a story of belief, power, and control. Every coin minted, every note printed, every digital token created reflects humanity's oldest instincts: to measure worth, to store effort, to dominate uncertainty. From Mesopotamian clay tablets to quantum trading systems, the language of finance has always been the language of civilization itself. It built empires, funded revolutions, and shaped modern identity. But every system, from Rome's silver to Wall Street's derivatives, carries the same fragile truth: value exists only because we agree it does. That agreement is both our greatest strength and our greatest delusion. As technology rewires our economies and AI begins to manage capital beyond human speed, one question endures: who truly controls value? Us or the system we created? The history of finance isn't just the story of money, it's the story of trust, gained, lost, and rebuilt again. We are heirs to millennia of ambition and risk, from traders on dusty roads to coders minting digital gold. And though our currencies evolve, our motives do not. Power, security, freedom, these are the ancient assets that have driven every transaction in history.